Hello and welcome to the Capital Spreads weekly update. Today is Thursday the 25th of March 2010. Week so far we've seen a bit of a grind higher and the FTSE's up some 1% from where we started, and it's interesting to see that a lot of the other indices now have actually caught up with the FTSE. A month ago the FTSE was forging ahead and other indices, the Dow, the DAX, S&P, were all just slightly struggling to keep up with the London market. But it would seem now that after a couple of weeks or so where the FTSE has traded sideways, we've now got the Dow, the S&P and the DAX sort of hitting new highs for 2010. So they've certainly caught up. And the news flow so far this week really has affected the FX markets more than anything else. So we've seen some increased volatility for currencies such as the euro and sterling, of course, mainly down to the concerns over the pig countries. Portugal had its debt downgraded this week, and that put serious pressure on the euro. And of course yesterday we had the budget from Labour, unsurprisingly more of a political budget than an economic one. So that's left us a little bit stronger on the week. Currently the FTSE is around 5,700, the Dow just below 10,900, we're currently calling it to open a little bit positive. For gold and FX markets, gold is around 1094. It's suffered recently, found a little bit of support around these levels, continues to bounce, but those bounces remain a little bit short-lived, and really the strength in the dollar has caused gold to fall from around 1140 to where we are now. For cable, we've dipped again below the 150 mark. There's a lot of weakness yesterday on the back of the UK budget, but has bounced a little bit, so we're around the 149.40 mark at the moment. So the look ahead, really, we've got strength from retailers today, and that's on the back of some good UK retail sales numbers and some very, very good numbers from Next as well. Their share really putting on some gains today, so that sector performing well. And it would seem that obviously the weather has certainly improved in the UK, and a little bit of sunshine has meant that we've all gone back to the shops. And how are clients trading at the moment? Well, the strength of indices has only made them want to sell into the markets even more, expecting a correction at some point. 5,700 is quite a level for the FTSE, so clients expect maybe the market is due a bit of profit taking, so they're very short FTSE, very short Dow, S&P and the German DAX. They're long on the currency front, they're long sterling, long the euro, so generally buying into the weakness of those currencies and relatively dollar negative, and also they're long gold, so trying to buy into the recent weakness of gold, expecting the long-term trend of upward trend to remain intact, and they're selling into oil, which continues to struggle around the $80 mark. What we've certainly seen is an increased volume in FX trading. Clients have been trying to take advantage of these big moves in the likes of cable and the euro, so it's interesting to see that's picked up quite substantially. For the rest of the week, well, today we've got Ben Bernanke talking in the US. He's going to talk about the exit strategy for the US. Now, of course, he was meant to do that in February, so we've seen the transcript of his testimony, so you shouldn't really expect very much from that, but of course he may make some changes to what he said then, and it may provide a little bit of volatility for this afternoon's session. And then tomorrow we've got GDP numbers and the University of Michigan confidence numbers from the US as well. University of Michigan just expected to tick up, rather like the UK retail sales. No reason why it shouldn't. The weather conditions have improved, the stock markets have rallied, so everyone's probably feeling a little bit better about themselves. So what's the theme of the week? Well, we can't ignore the budget from yesterday. As already mentioned, it was definitely more of a political budget than an economical one. No mentions of really trying to address the budget deficit of the UK. We currently stand in a sort of similar situation to the likes of Greece, with a huge budget deficit and absolutely really no real indication as to how they're going to tackle that, and very much dependent on the growth forecast given by the Chancellor. What we can really expect more than anything else is higher taxes, and next month, of course, higher national insurance contributions. So we're all going to have less money to spend, and that really, again, could possibly take its toll on the UK economy. So a budget that was there really to appeal to the electorate and try and keep Labour in power. But of course, we'll see when the election comes up, lots of that during our weekly updates. But that's it for this week. As ever, give us feedback, media@capitalspreads.com.